2025 has been a great year, but SoFi has peaked, or at least that's what the bears want you to believe. Growth is slowing, analysts are lowering their estimates, insiders are selling, and the company is allegedly diluting shareholders. In this video, I'm going to break down each of these bear arguments and ask a simple question: is SoFi stock a buy, or is SoFi a sell for 2026? I've been following SoFi for a long time, all the way from around $6. It's the single most talked about stock on this channel. So if you love SoFi and want me to continue making these videos, let me know in the comments. I'm not a financial advisor, and this is not financial advice. These videos are for entertainment purposes only. If you enjoy them and want to see more SoFi videos, drop a comment and hit the thumbs up. It really helps the channel. Now let's get straight into it. Something I forgot to mention in my last SoFi video is that the company is expanding with over 125 jobs in Charlotte, North Carolina. Recently, Mecklenburg County approved incentives for SoFi's 150 job expansion in Ballantine. This follows SoFi introducing the smart card and announcing the launch of SoFi USD, a fully reserved US dollar stablecoin issued by SoFi Bank. It looks like SoFi is preparing for major expansion. If you check their careers page, they're hiring hundreds of new employees. Things are really ramping up. But is SoFi stock a buy? Some investors think it's not, while others are more optimistic than ever, and rightly so. In my opinion, 2026 is going to be a huge year for SoFi. The real question is how it plays out. An article listing the top 10 stocks to buy in 2026 ranked Lemonade as number 1 due to machine learning and AI growth, narrowing losses, and accelerating revenue. But SoFi was ranked number 2. The article stated that 2026 should be another terrific year for SoFi, citing accelerating member growth, increasing product adoption, and a strong cross-selling strategy. Other companies on the list included Walmart, American Express, and New Holdings, another digital bank I've been watching closely. Let me know if you want me to cover that stock on the channel. Now let's talk about the bearish argument. A Seeking Alpha article titled SoFi, "Time to Exit This Fintech Darling" highlights strong revenue and member growth, but claims growth is slowing. Profitability is still early stage and points to share dilution, insider selling, and analyst downgrades. First, let's address share dilution. SoFi diluted less than 5% of total shares. That's not major dilution. It strengthened the balance sheet, and the shares were sold at a higher price than today's stock price. Next, insider selling. According to Yahoo Finance, recent insider activity included 5 transactions totaling about $9.5 million. 4 of the 5 were tax-related stock dispositions, and only one was an open market sale by a senior executive. Jeremy Rell sold 91,000 shares worth around $2.5 for $5 million. But he still holds over $21 million worth of SoFi stock. Other executives, including Kelly Keough, Chris LaPointe, and Anthony Noto, also sold shares. The bears want you to believe management is selling because they don't believe in the company. But the reality is very different. Most of these transactions were coded as F, meaning shares were withheld to cover taxes after stock-based compensation was awarded. Anthony Noto sold about 53% of awarded shares for tax purposes. The same applies to Kelly Keough and Chris LaPointe. Jeremy Rell's sale was an open market transaction, but just days earlier he had been awarded over 1 million shares. The idea that insiders are dumping shares due to lack of confidence is simply misleading. The bearish article also claims Wall Street analysts are lowering EPS estimates due to slowing tech platform growth and rising expenses. However, looking at SoFi's investor presentation, tech platform accounts have grown massively over the past 5 years. With only a minor dip in the most recent quarter, Q3 2025 revenue was the highest in company history, while contribution margins dipped slightly. That's because other segments saw significant growth in contribution profit. As for analyst revisions, SoFi has beaten revenue and EPS estimates almost every single quarter since 2021. The only negative surprise occurred before SoFi became profitable in 2023, when sentiment was extremely negative and the stock was near all-time lows. SoFi went public via SPAC in 2020, and between 2022 and 2024 many SPAC companies failed. That created poor sentiment across the board, even for quality businesses like SoFi. But SoFi survived, adapted, and is now moving in the right direction. Another recent development: Brighton Jones trimmed its SoFi position slightly. While other firms increased theirs, Orient Private Wealth raised its stake by 21%, and Kessler Investment Group added SoFi as a top 20 holding, according to Fintech. Institutional ownership of SoFi is at its highest level ever as of December 2025. Funds are clearly accumulating shares, and why wouldn't they? SoFi is growing members faster than ever, cross-selling more products, and pushing toward record-adjusted net revenue and adjusted EBITDA for full year 2025. Full-year financials will be released on January 26th. If you'd like to see a SoFi earnings preview before then, let me know in the comments. I hope everyone has a wonderful Christmas. Remember, I am not a financial advisor, and this is not financial advice. Just my thoughts based on what I've been reading recently. If you enjoyed the analysis, don't forget to like and subscribe.